Everybody's been talking about GameStop stock, and even though I'm not interested in buying it, I thought it might be kind of fun to do a video looking at what I think the stock might actually be worth. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice, and it's all time sensitive. GameStop was in the news on Friday, big time, because there was the streaming event. There was a big drop in the share price. There's all these things going on around it. I had to think about how I really wanted to value this one. If you're not new to the channel, you know that usually I use a DCF model and I combine that with future earnings expectations, and I look at what the multiples would be at different PE ratios in the future. This is the one from my PayPal video. But for this stock, GameStop's revenues are declining. The earnings don't look great. Free cash flows are negative in the last trailing 12 months. They're negative for the last fiscal year. And when they have been positive recently, it's been inconsistent. And so there's no real plan that I've seen for this company to really start growing revenues again yet. A lot of people have a lot of, faith in Ryan Cohen to turn things around and all of that. But I haven't really seen a concrete plan yet for this. So judging based on the fundamentals of the company, doing a discounted free cash flow model for this or looking at future earnings multiples, to me, really didn't make a whole lot of sense, especially when you consider that the future is when you look at analyst estimates, it seems to agree with what I'm seeing here, in that there's not really a plan to turn things around and it's a declining business still. So the way that I decided to approach this valuation was to look at it from a book value standpoint, and then to combine that with the new share offerings that they've issued and try to estimate what I think the stock might be worth from that. They just disclosed their first quarter 2024 results. So I was able to go in and look at the balance sheet, and I was able to look at the stock offerings that they've just recently done, and then use that information to try to come up with an estimate here for fair value. So from the quarterly release they just put out, you had the total assets and the total liabilities of the company to get a book value for the company. So you subtract the total liabilities from the total assets to get a book value. And I also looked at what the shares outstanding were from the quarterly earnings release that they just put out. And then I added in the shares that they sold in their May public offering that they just had. This is GameStop trying to capitalize on the expensive share price by issuing new shares. There's a lot of debate about that, but in some ways, it's kind of a smart thing to do, right? Because you're taking advantage of an overvalued share price. I'd like to see companies buy back stock when the stock is cheap, when it's expensive, and you issue shares as long as you in the long run are doing right by your shareholders, rather than, coming up with or having new debt added to the balance sheet. It's kind of, in some ways, a smart thing to do, right? So they've offered these shares in the May offering. They sold 45 million new shares. And the proceeds from the May offering, they said in the release here, they raised $933.4 million. So I added that line in. They also had the news come out that they were going to do a new stock sale plan. They're going to sell up to 75 million new shares of stock. So I also added that line item in. And if you add all those shares up, you get a total estimated shares outstanding of 425,900,000 shares. I had to estimate what I thought the proceeds from that 75 million stock offering would be. So what I did was I took the average share price from Friday, June 7th of $37.06, and then multiplied that by the 75 million shares, and then multiplied that by 0.985 because there's a 1.5% sales agent fee on that stock sale. Based on volume, I put a note in here. I would not be surprised if some amount of the stock offering was completed on Friday. So if we go look at Friday's volume, you can see the June 7th volume was 277,624,400 shares of volume that took place there. That is a significant spike from the number of shares that were traded the day before. It's actually pretty close to what the offering was. Now, obviously, there were some other things like the stream going on. So, it's hard to tell how many shares they actually sold on Friday, but I wouldn't be surprised if they sold a chunk of them. I did put a note in. So what's the effective taxes on the proceeds of these sales? GameStop's effective tax rate has been inconsistent recently. And so it's kind of difficult to know that. But so I did just want to put that out there as something to consider. So it is, there's some assumptions that go into this one. And so it's not like the value I'm going to get is absolutely that's what it's worth. Just like any other valuation, there's always assumptions that go into it. But when I look at all this, I get a fair value of equity of $11.69 by taking the book value plus the estimated proceeds from the issuance of new stock that they've done, and then dividing that by the total estimated shares outstanding. And again, I think this is the way I would do it because I don't see a plan to grow cash flows. I don't see a plan to significantly grow earnings or remain profitable. And I see declining revenues. So I would base it basically off the book value and these new share offerings they've done and say, if you liquidated this thing, essentially, that's what it would be like. It's like if you liquidated this thing, what would it be worth? And that would be what I come up with. Now, if it goes to that level, I'm still not interested in buying because unless they figure out a way to have the company at least maintain their revenues or start growing again over time, I would see this fair value of equity come down anyway. So if it does go to $11.69, I'm not interested in buying it even there. And that would be with no margin of safety anyway. But I'm just really not interested in this company in general unless they were to say, hey, this is how we're going to turn the business around and this is what we're going to do going forward. And I thought it was a good business plan and I could get the stock at a good price. GameStop closed Friday, June 7th, 2024 at $28.22 per share. So that's what we're looking at with GameStop, in my opinion. If you haven't come check out the channel yet, come do that. If you're interested in equity valuation at all or looking at how I value companies, come take a look at the channel. I'd really appreciate it. Like, subscribe, click the bell to get updates about future videos. Follow me on X at Stock Sale Flyer. I'm always over there talking about markets, talking about equities, and giving my perspectives. A lot of the time, I also, when I buy something, I put it out over there before I even do a video about it. So it's a good place to keep up with what I'm doing. Thanks for joining me today. Take care.